All right, welcome everyone. Very excited to have Laurie Itkin here with me today, and we're going to talk about equity compensation. So, first off, though, Laurie, will you introduce yourself and just tell everyone a little bit about what you do, and then we'll jump into the topic.
Absolutely. Well, thanks for inviting me, Amanda. And for those of you watching, Amanda is one of the very popular mediators with her partner, Jen, and some other folks in their entity now growing. And so we've worked on some cases together. And as she said, my name is Laurie Itkin, and I'm what's called a Certified Divorce Financial Analyst, or CDFA for short. I'm also a member of the Association of Divorce Financial Planners. And I also, in my spare time, I actually manage investment and retirement accounts as a financial advisor and investment advisor with Coastwise Capital Group. My divorce financial planning services are done through my own company, which is called The Options Lady, which is appropriate for our topic today, isn't it?
It's very appropriate. And when I always what I always think of when I have worked with Laurie on cases and referred clients over is I think the options lady is a great way, because when you're going through divorce, figuring out your options, right? And what that means financially is just so important. And so, I always thought that was a great title that you use.
Thank you. It's a triple entendre, actually. So the option seems to go for so many things, and we're going to be actually talking about stock options as one of those things today.
Yeah, definitely. So speaking of, because like I said, we're going to talk about equity compensation. And I was wondering if we can kind of start off with you giving kind of an overview. And I hear a lot of times from clients just kind of the like confusion or blank looks of like trying to understand, what is RSU, what are options, what are like, so can you kind of also explain, for those who might not know, what do those stand for? What are they? Give that background to start off.
Sure. Well, we want this discussion to be useful for the employee spouse who gets these things and the non-employee spouse who may be totally lacking of knowledge about what this means. So we're going to try to, cover both audiences today. So the first thing is, when it comes to just a divorce situation, one of the first things we're looking at is people's pay stubs, people's W-2, how much income is each spouse bringing in, or maybe one spouse is bringing in the income. And it's always really interesting because somebody who gets paid a salary may get the same amount or more in equity compensation. So if the person is making $150,000 a year in salary, shocking, the W-2 may say they made $400,000 last year. Some of that may be a cash bonus, and much of it may be what we're going to talk about today, equity compensation. So in a nutshell, there's many animals, but I think the two things that we see the most in our practice is, number one is restricted stock units, RSUs. A variant of that is a restricted stock award. There may be performance stock units. There's different names for it, but what you'll mostly see is RSUs. So if you or your spouse work at Amazon, Qualcomm, Google, Viasat, you name it, more and more companies are offering these. You want to be familiar with those. The second most common that I see are stock options. They used to be used a lot, and they're still used a lot if you work for a privately held company that doesn't have a stock that's publicly traded on the markets. Mm-hmm. So let's just break it down I'm going to be very high level here. A restricted stock unit, you may be, again, I'm putting myself in that, I'm talking to you like you're the employee spouse here. You may be awarded every year in your annual performance review, you may get a new tranche of RSUs, and they are going to vest over a period of years in a certain schedule. So a common schedule may be you get a tranche that vests 25% over 4 years, okay? You cannot sell that stock until it's vested. So you may be given the stock now, but some of it may not be owned by you for a year, 2, 3 years, okay? And I think the non-employee spouse needs to understand that, because when you pull open that E-Trade statement or the Fidelity statement and it says, it'll say the vested stock and the value, and it will say the unvested stock and the value. And Amanda, we've been in the situation where the non-employee spouse will look at that statement and say, there's $500,000 here, right?
Yep. Oh, yes, for sure.
But what you need to know is that if the employee leaves the company tomorrow, he or she will not have ownership of many of those shares. And many things can happen. If the company gets acquired, we don't have to go into every detail, but just let's say if you're not there when the stock vests, you may not get it and you probably won't get it. Okay, so don't count your chickens. Also, the value that they put there is based on today's stock price. My gosh, if you've looked at the stock market, a year ago, we had the biggest crash we had in years, and a stock that maybe take a stock Acme company, maybe it's worth $50 today. Good chance it was worth $30 or $35 when we had the crash. Okay, so that's restricted stock units. Let me talk. Oh, also restricted stock units almost always have value. Now let's talk about briefly stock options. You may be granted options, again, with a vesting schedule like we discussed. And there's complicated vesting schedules. They may cliff. You may have to be there for 12 months before any vest, and then the others vest over a time period. Okay. The options are much more complicated because the options are granted with what's called a strike price. So, and often you'll find that the strike price is sometimes or often the price of the stock today when you are granted that option. So the only way you can make money is if the stock price for your company goes up more than it was on the day you were granted. Okay. Not always that way, but again, I'm talking about the common traditional manager, IT person, finance manager, anything that's going to be getting these. So, and then at some point, I should probably take a breath, but we should talk about the taxability of these and what that looks like.
Yeah. So we'll get to that. Let's talk about when you're talking about we've got RSUs and we've got options, like what are they considered, right? Are they considered an asset or are they considered income? Are they both? I mean, that is one of the biggest questions I get from clients, is what are they considered? And if they are one, well, I'll let you answer that question first and then we can talk about, what it looks like.
Sure. That's the big question, right? And people, I try in my spreadsheets to make that very clear. So let's talk about how you determine what is the community property amount of, let's stick with RSUs for now. Let's just make that easy. Not that it's easy, but
understand.
So, if you were granted RSUs during the marriage and they vested during the marriage, they're pretty clearly community property, right? You probably are going to start with trying to separate these 50-50, at least as a starting point. And clearly, when I'm doing my memos, when I'm a neutral for a couple or even an advocate for one, I like to presume they want to know what 50-50 is. Okay, so that's the community property. Now, and if anyone from another state's watching this, call it marital property. Now, what happens if in California, we have a date of separation? It's very important in these cases. What happens if the parties were separated and the employee gets a grant after the date of separation? That's going to be that employee's separate property, 100%. Where the confusion comes in is the stock was granted, the RSU was granted during the marriage before the date of separation, but it's going to vest sometime after the date of separation. And Amanda, you're one of the few mediators that I know that actually understands this formula and uses it, because I've seen your spreadsheets.
Yes, not as good as yours though, I will say. And I like when my clients work with Laurie because I know it's all there, it's all clear. Um, but yes, and that's what I always find like the one piece of having to explain, and I explain it the same way you do. You've got what is entirely community, what's entirely potentially separate, and then that in between part.
Right.
And so what I hear from you is that that portion that was granted during the marriage but vests after the data separation is there is still a community property aspect to some of them. Is that correct?
Correct, correct. And we can figure that out. Now, we'll get back to taxes in a minute, but let's talk about income then. If
Hmm.
we, because remember, no matter what we talk about, when those RSUs vest, they show up on that employee's paycheck stub, they show up on the W-2, they show up on the tax return. So it appears it's simply like a cash bonus. But if you're going to be dividing some of those assets as property, then we want to make sure that no double dipping is occurring. And what I mean by that is if we're dividing some of these shares, but they're still going to show up on the employee's pay stub as income, that can get pretty confusing. So what I like to do in my spreadsheets is I like to separate what's community property from separate property. And then we know the employee has these separate property shares vesting. And 3 or 4 years after the divorce is final, all of these will be separate property depending on the vesting schedule.
Hmm.
And then some mediators or attorneys may say, this is income available for support. I'm going to do a bonus table or a Smith-Ostler-Smith. Sometimes they switch the names around. And
Hmm.
maybe I'm going to treat it similar to a cash bonus, right? Because if a person gets a high cash bonus, that also could be considered income available support.
Hmm. Yes,
So the
correct.
bottom line is there is tons of confusion. These things are vesting over time. What does my spouse get as property and what as income for support? And it's very important, the distinction, because if it's being divided as property, the non-employee spouse will probably get more than if it's being treated as income.
Yes, yes, I've seen
Not
that definitely.
always, but often. I don't want to
Yeah.
say always because there may be something that, comes up.
Yeah, of course. So let's break those down separately then. And if
Okay.
we're talking about them being property and being divided, some of the questions that I think come up is, one, are they dividing the actual RSUs themselves in the sense that this is the number that each gets, or what if one spouse wants to buy out the other? So how do you kind of work, whether as a neutral or an advocate, on figuring out what does that look like?
Yeah, great question. So first of all, it's really important, and the employee spouse is going to know this full well. It may show on the vesting schedule that 50 shares are going to vest. But you know what? The company is likely going to withhold income and employment taxes, and the typical withholding rate is 40.88%. However, oftentimes it's lower. You may see 35, you may 37. Sometimes it's higher if this is very highly paid. And we can't control how much the company is going to withhold. But so let's just round it to 40%. So if you're expecting 100 shares to vest, you may find that you only have 60 shares to divide. Okay.
Mm-hmm.
And what I like to do in my reports is I like to see confirmations of previous vesting incidents. How much did the company withhold for taxes? And you know what, though? Oftentimes they withhold too little. And then when you have to do your taxes at the end of the year, what? We owe $20,000 in taxes. What? How did this happen? It's a problem
Yep.
that ain't going away.
Yeah. Well, and what I've seen oftentimes too, and tell me if you see any different, is even if one spouse, if the non-employee spouse is being awarded a certain number of the RSUs as part of the divorce, they're not going to go into that spouse's name, correct? So how do you deal with that piece of it?
Right. Great question. See, I'm just jumping over the basics. Thanks for keeping me.
No problem.
Thanks for keeping me on this. So yes, so when the RSUs vest, they're vesting and going into the employee's Fidelity account, E-Trade account, Morgan Stanley account, whatever. And the employee's spouse, I always recommend transferring. So let's just say you're at E-Trade. The non-employee spouse can open up a brokerage account at E-Trade to accept shares. So shares can be transferred before the divorce is final, after the divorce is final, of course, depending what the marital settlement agreement language states. And they can be, when I say they can be transferred without tax impact, that I mean that in the immediate sense, there's other tax impacts. But people assume that they have to sell these shares and then give the cash to the spouse. It's one way to do it, but I prefer them being transferred. It's cleaner. It's cleaner. The complication is that if this is income available for child support, my understanding is that child support must be in cash, that you would not be transferring shares for child support. You may actually have to sell the shares. Again, there may be other situations, but
yeah, so that's where we're talking about the income for support purposes. Right. And yeah, that would be different because yes, child support, as I understand as well, is in cash. But if they've decided to divide the actual RSUs, what I'm hearing you say is once they vest, the non-employee or the employee spouse can transfer whatever number they're required by the settlement agreement over to the non-employee spouse, and then the non-employee spouse can do with that what they want with it.
Right, without having to coordinate with the employee spouse. Should we sell it now, not sell it? You know, because as you know, I've seen employee spouses who think their company is the best thing since sliced bread. They're never going to sell any of the stock. And the non-employee spouse may need cash and wants the stock to be sold. Alternatively, we know many families who their marital standard of living is dependent on those RSUs. The minute those suckers vest, people are selling those to pay for their bills. So, but isn't that great that you can untie each spouse's the decisions and have independent decisions?
Yeah. Now, do you ever have, when we're talking about still on the asset side of things, do you ever have where, because I encounter this sometimes, where the employee spouse says, well, I don't want to give up any of these, right? This is my company where I work. I have to work hard to keep these. So can I buy her or him out, right? Can I buy the other person out? So how do you deal with that?
And we've worked on a case where it was a privately held company, which was even more complicated. Okay. When I'm giving advice, either as a neutral or an advocate, and remember, I'm not giving legal advice, okay? And in some cases, I'm not really in the role of to be giving advice. I'm really just giving options, right? So it depends. I may be in a role where I'm giving advice. I may be in a role where I'm simply laying out options for consideration. If a buyout occurs, I can tell you one person is going to get the short end of the stick because let's think about it. As we mentioned earlier, these RSUs may never vest. Okay, if we're talking about future unvested RSUs, the employee spouse could get fired. The employee spouse could quit. The employee spouse could the employee spouse could have a nervous breakdown. I mean, you name it. We've seen it all. And so the employee spouse will probably want a discount for that because the employee spouse is going to say, look, the E-Trade statement says they're worth $500,000, but come on, I'm 63 years old. I'm going to retire. I'm not even going to be there 3 years from now, blah, blah, blah. You know what? I'll give you 100,000 for these, right? And then the non-employee spouse is thinking, yeah, I hate that company. I don't want it. I don't trust it. I hate the stock market. I'd rather have a bird in the hand, $100,000 now, or whatever it is. I do not like to advise on buyouts because I'm going to be wrong. And I like being right. I like being right and accurate. I don't like being put in a position where I know I'm wrong even before I open my mouth. What's your view of that?
Yeah. Well, what I find is it also becomes this like you're saying, well, how do you know what it's worth? And we talked about already what you said, that like the value that's on that statement isn't necessarily what that value, may actually be. And so, what is difficult is to find, first off, to find a number they both agree on in mediation at that moment. And then, like you said, well, what happens when down the road one of them ends up in a potentially a better situation or a worse situation, right?
Mhm.
Because if the employee that kept those, those RSUs and then ultimately those shares, maybe they end up being worth nothing, right? They like, and
Especially
now
with options, that's a
yeah,
real, less so with RSUs, but a huge risk with
that's
options.
yeah, so maybe not nothing, but maybe the stock price goes down. Maybe it's just
Right.
what they're actually worth versus when you bought the other person out. And
Right.
then we can talk about options in a second too. But then alternatively, it's a question of, well, what happens if it's then worth a lot more and now you've been bought out? Are you going to feel like, well, I should have waited? The conversation though that I have a lot of times with them, especially because we're in mediation, is what is more important to you? Like, what is your interest, right? And like you said, for some people it is, what, I don't want anything to do with that company. I want the cash, and then I want to invest it how I choose to invest it.
Right. Or spend it how I want to
Or
spend it. I
yeah,
mean,
that's true
or
too.
buy out my spouse. I want the house, right?
Yeah,
Anyway. Yeah.
yeah.
But it is really, I'm a financial advisor too. So I've seen stock prices. I look at how many stocks every day, and I just know I see volatility of stocks. But I can't be, I will, it's very hard for me to make a valuation. And when I do, I use lots of assumptions. You've seen a memo of mine where I'll say, I think a reasonable discount rate to offer your spouse is X and this is Y. And I just feel like as long as I lay out assumptions, and both parties and the mediator, it's very important the mediator understand my assumptions too, right?
Hmm.
But on something like a buyout, I really think you may want to see a consulting attorney just so you are told what your risks are. Now that may not help that may make it more difficult to come to an agreement, but especially if it's a material amount of money, you need to
Hmm.
I think you should take the investment and get as much information as you can.
Yeah. Yeah, I think that's very important. And I think one of the things I too is that it is that, like you said, you're making certain assumptions and you're doing it that way. Well, your spouse may take that same information to someone else and get a different answer, right?
Right.
And so,
Absolutely.
it becomes, I mean, if you're litigating, that's a different story, but for mediation, it's, well, we may have to compromise on a number, right? It may not be exactly what your professional said and it may not be exactly what yours said, but let's find, somewhere that you both feel comfortable with and in the scheme of everything makes sense. Right, because we're looking
Absolutely.
at the whole
Absolutely.
marital estate.
And you will get different opinions and advice depending on who you talk to. And that's good information to bring back to mediation, because that means
Mhm.
there are things that you'll need to compromise on.
Yeah, yeah, definitely. So, I know we've been talking mainly about RSUs. Is there anything on kind of the option side when we talk about like the asset piece of it that is important to know?
Sure. Well, and so as we talked about, when RSUs vest, a whole bunch of them are going to be taken back by the company to cover estimated taxes. Now with options, because they have a strike price, the difference is when options vest, they are not recognized as income immediately. If you do nothing and they vest, they don't show up on your W-2. Now there's different cases I'm talking about, let me specify, non-qualified stock options, non-qualified options, because there's incentive stock options we're not going to talk about
Hmm.
because those aren't as common. So they don't show up. But as an asset, where we talked about how RSUs, once they vest, they can be transferred. Very few companies will allow options to be transferred to the non-employee spouse or even your spouse, even if you are
Hmm.
married.
Hmm.
So options, let's just assume I think you should go in with the thought that they can't be transferred. So in this case, this gets really tricky because there's something being in the money and out of the money. So we may look at the E-Trade statement and the value of the unvested options is 0. And that would be in a situation where when you were granted the options, the strike price was $70 and the stock now today is trading at $60. Okay. But next week the stock could be trading at $80, right? So what is the value? And people, let me tell you, and I know you've seen this so many times, the employee's spouse, whether trying to be, I don't even think they're trying to be deceptive. I think they just say, look, these aren't worth anything. They may never be in the money. You don't need them. They're zero. Let's just forget about them. Has that happened to you?
Oh, definitely. More than once. That's what I always hear. They're not worth anything. Like, you should just give them to me, and or they try to put a little bit of a value on it so that they don't look like they're saying nothing. But it's very like there's no rhyme or reason to it. Let's put it that way.
Yeah. And there is a bigger risk. I mean, where with RSUs, they will always have value if you're there to collect them as long as the company doesn't go bankrupt. With an option, there's a very high likelihood it won't have value, but usually options are awarded with a 10-year expiration date. So think about this. It may be worth nothing now, or look, it's always worth something, but it may appear it's not worth anything now. But 5 years after the divorce is final, they still can be exercised. And what if it's a huge amount of money?
Mm-hmm.
Right.
Yeah.
So
Okay.
with the assets, you can't divide now. So what happens is if we do a schedule where we are dividing vested options, it gets very complicated, but the non-employee spouse should have in their marital settlement agreement some schedule or attachment to say, you know what, every May 13th or every May of every year, more options vest. And these are the options that are going to vest. And the non-employee spouse needs to be savvy and look at the stock price of the company and say, do these have value? Okay. And now I don't know how everyone writes this into their agreements, because sometimes it's hard to be enforced, but I can tell you it may be unlikely that the employee spouse is going to all of a sudden remind their spouse that these are in the money. I don't know.
Possible. Yep.
Okay.
So what's important to put into the agreement, or what can the non-employee spouse do in that situation?
Right. So the non-employee spouse could familiarize. Okay, it's very easy. You can just go onto Yahoo Finance or Google. You can Google what's Amazon stock price today, what's Qualcomm stock price today.
Mm-hmm.
And if the stock price is higher than the strike price, because each tranche or award is going to have a strike price tied to it, there's going to be different strike prices depending on when these were granted over the years. And that's a good hint that, well, gee, it's trading at, I'm supposed to be getting 50 options and it's trading at $80 a share and the strike price is $70 a share. So these options have value. Now the ex non-employee spouse can tell the employee spouse, ex-employee spouse, hey, I want you to exercise my options. Right? I'm the options lady. They want you to exercise my options. But that at that point, when the employee exercises the options, he or she is going to recognize all that taxable income. Okay.
Yep.
And again, taxes will be hit. So how much does the ex non-employee spouse get? You may want to work with a CPA or a financial advisor to make sure you're getting what you're supposed to be getting.
Yeah. I always say that's very important, and we write that in with our agreements, is making sure they work with their CPA, they work with their financial advisor, because otherwise, we don't know what it's going to look like when it happens, and, making sure that that's all done correctly.
Right. And a good thing is if the parties agree, they could exchange W-2s with each other, tax returns. That's not going to give you all the answers you need, but it's going to at least provide some backstop, that gives you a parameters and a framework.
Yeah. So let's I know we touched on it a little bit at the beginning, but switch gears and talk about when we're talking about RSUs or options being income for support purposes,
Okay.
right?
Okay.
So I think the questions that I get most often are, first off, like, when does it count, right? When is it actually income and get calculated for support? And also the big one too is, like, when does it stop? I don't know if you get that question, but they're like, do they get a portion of my equity compensation forever? Like, So, I think those are the two big questions. So if we can
Okay.
start with kind of the when does it count? I think that's
Okay,
important to
this
know.
is great. Okay, so the RSUs are going to count when they vest. On that vesting date, that's an event you should be aware of, both sides, okay? Because that's when the company is going to recognize it as income, as gross income. In terms of options, there's a new 2018 now, I think, court case. Maybe it's more recent than that, and I don't know if I pronounce it right, McElwaney or McElwain.
It sounds as correct to me as I would
Okay.
imagine.
Again, and remember, I'm not an attorney, so I can't be interpreting this case for anybody. But what it did discuss was that there was a problem that was occurring. Options would vest, and the employee ex-spouse, they would have value when they vested, but the employee ex-spouse would choose not to exercise them while the child was under 18. Little Johnny's 14. I'll exercise these when little Johnny's 19, and then I don't have to pay child support on it, okay? And the case didn't really directly address spousal support, but the child support. So now, and I think this is, I think attorneys and mediators are, it's new, they're trying to figure out how to deal with this. Now it's basically saying, it's setting the policy that once these options have value, even if they're not exercised by the employee has to treat it as if it were exercised and pay the child support due on that.
Yeah.
I don't know, again, how this is going to be enforced or anything like that. But what's from my standpoint, I get why that was the decision. And I don't even know if it was an appeal. I don't know. But on the other hand, there may only be like once there's in the money or there's a value. What if the value of that option is only like $10? I mean, are we gonna pay the child support now like $10 when then maybe the employee doesn't exercise it and they're worth more later?
Yeah.
Right. So I can't answer any of these questions. I have just questions myself. I'm full of questions.
Yeah, yeah. And I think that, what we see with a lot of the court cases is they don't answer all the questions. And so then there's, right? And until it gets litigated again, and then somebody, you may have more answers. And certainly, I mean, that's one of the great things with mediation is that the clients get to make their own answers and, get as much information as we can, and then decide, okay, well, what is that agreement going to look like, and how is that gonna work? So when we're saying that the RSU, if it's an RSU that vests, because that's cleaner, right? To know,
Yes.
okay, it vests. Well, is that calculated in for the whole year, or is it usually, do we look at it when we're talking about support, look at it as like a bonus more so?
Okay, so the way I like to do it, and I don't think my way is the only way, I like to actually have the parties agree on a percentage that will be applied. You can do this through the bonus table and the software, or you don't even need to use the bonus. You can just use a percentage for child support and spousal support. But you have to be clear that you're applying that percentage on the gross value, not after. Now, this is where it's confusing because for property, you are going to be transferring net shares for the RSUs, net shares. But for the support, if you're applying a percentage to a cash bonus in your negotiations, that's going to be applied on the gross value of the cash bonus before the company withholds taxes.
Yep.
So aren't we to be applying it on a gross amount when we're looking at the RSUs and options as well? And with the options, the income is not actually, it's the difference between the strike price and the price when you sell it. So there's another component there. And I don't expect the average person to know how to do all this stuff. Even the employee spouse who's like watching his or her stuff every day isn't going to really know how to do this.
Yeah. And one of the important things, that we often do in mediation is, how are you going to deal with it in the future, right?
Right.
So, are you going to return to mediation? Are you going to, you're going to employ a financial neutral that you're going to go to when those things come up? So I think that's how I look at it most importantly, is, planning for those inevitable disagreements, right? So we can't
Yes.
answer everything today, but we can put in place how you might deal with them in the future, and figure it out, and know what it is. And I will say, even myself being a CDFA, there's a lot of the financial stuff that I, like I said, work with someone like you to say, hey, like, focus on this with the clients. I will say that unfortunately, I'd say most attorneys and even a lot of mediators don't even have much financial kind of background or education. And so, making sure that, if you're working with an attorney or working with a mediator that, doesn't necessarily have even any, that you're bringing in the right professionals to have that
Right.
conversation with. So your MSA isn't silent on things that should be included.
Right. And I love your approach for foreseeing what could happen and maybe not solving for it now, but having a process to deal with those issues. Now, you asked about the every employee's fear. Am I going to be paying something on my
Yes.
equity compensation forever? So first of all, for the property, that's going to sort of peter out over time because of the vesting schedule and the community property formula. The property, you may have a couple of years, a few years of that, depending on tranches that are still vesting, but the income for support. So here's the situation that I often see, because most of my clients are in their 50s. Really, I've got like the 40s and 50s. I don't really have a lot of the young people coming to me, younger people. And so we have a situation where the marital standard of living was something, right? When I say marital standard of living, you know what I mean. But for those watching, if you look at the tax returns over the past 3, 5, 8 years, what was the income being brought into the household? Or put another way, what were the expenses, assuming you didn't live off of debt? Now we have somebody at the peak of their career, funny, maybe wanting to get divorced at the peak of the career, and not funny, but I'm just saying interesting, right?
Yeah.
Ironically. And maybe the household lived on a $200,000 of combined income, but now the equity compensation is bringing over just the past couple of years, 300,000, 400,000, right? Now, with child support, my understanding is that the child support should really reflect the current income of the parents.
Yes, and that is correct, because, and I'll just say this from the mediator legal perspective, is that, child support belongs to the child or children, right? And, because of that, it's always what is current, right? What is each parent currently making? There's no cap necessarily. Usually on that, there are some negotiated agreements where there could be, certainly, but that can go, and there is also an end date, unless we're talking about a disabled adult child. Like, child support ends when they turn 18 and have or graduated high school. So
Right. So with spousal support, this is like, first of all, let's just be honest. How hard is it to negotiate spousal support as it is, even just with a W-2 employee, even with just one working spouse? So now you have this equity compensation, and I've seen a lot of people propose caps, and you even mentioned the cap. You just why it may be inappropriate to cap child support. I think it's certainly something that is ripe for discussion for spousal support, right? Capping that. Also, I think having the bonus schedule helps, because I know certain companies, the stock or options vest once a year, certain companies it's twice a year. But spousal support, I mean, this is really the kicker. And I've seen everything. And you're writing these agreements, and I mean, maybe you could share what a couple of scenarios that you recommend as options.
Yeah. So, one of them, like you just talked about, would be the idea of a cap. So saying, for example, if this is the highest they made while they were married, and or what the marital standard of living was, but oftentimes we'll look at kind of what that highest was, that it will only go up to that point. So, if 5 years after or 3 years, whenever it is, you've now made more than that, well, you're only paying support out up to that amount. And I know people like that because that then gives them the motivation that the harder they work, if they're making more, they're not then paying that to their ex-spouse when they didn't make that during the marriage. So
Right.
that's one of the ones I think that's most common, is kind of that cap amount. Other times, it can be also related to either whether support is modifiable or non-modifiable. So
Mhm.
sometimes it may be that we've already agreed to use a specific number and it's going to be non-modifiable for a specific period of time. So then we're not necessarily each time paying support off of those. We've already kind of calculated it in. So those, I'd say, just kind of two of the, but really there can be many options depending on, see, we're using options again. It can be many options depending on, again, I go down to what are the interests, right? What is each party kind of wanting? And a lot of times I think the employee spouse, you can tell me if you see this too, they want the motivation to continue earning more and working for their company and feeling like they get that.
Yep. Yep. Well, it's the same thing when people say, I earned that pension. I mean, folks, look, when you're married, if you're living in California, you're in a community property state, and there's child support and spousal support that you have to address.
Yep, yeah, and we can talk about prenups another day. That's right. If you don't want the exact, what the community property laws say, but yeah. So I think that it's really kind of discussing the options and understanding, how do we look at the whole picture? I think that's like the biggest thing.
Right.
So well, we're kind of coming up against time here, but I
Yep.
just wanted to kind of give to you, Laurie. Is there anything that we have kind of haven't covered, that you think is really important that either employees and or non-employee spouse needs to understand about equity compensation?
Yeah, I would say, again, these are big ticket items. These things can be as important as the house or retirement. And so I really urge anyone watching to either hire a CDFA as a neutral or as an advocate, whether you're the employee spouse and you really want to know what you're in for, or the non-employee spouse and you want to get educated. Look, I mean, I have packages. I have a mediation money mentor package. That's a flat fee, and you get a set number of hours with me. It's all about financial literacy on both sides. And you may think, oh, we just hired a mediator or attorneys, it's so expensive. But really, to invest, 1,000 or two in something like this, which could impact tens of thousands or hundreds of thousands of dollars, it's a no-brainer to make the investment. And that
Yeah,
education you'll always have. No one can
yeah.
take it away from you.
That is a great point. And so, Laurie, if people are looking for you, and we'll put information in the comments and stuff as well. But where can they find you? What's the best place to do that?
Theoptionslady.com. Theoptionslady.com. You'll remember that better than my name, but it's Laurie Itkin. And I
Yeah,
take inquiries through my website. And like I said, reach out as CDFAs. What we often act as neutrals or advocates to one spouse. And there's going to be, depending on your situation, there'll be a good fit for you. So don't
yeah.
hesitate to reach out.
Yeah, great. Well, thank you so much. And, if you have any questions about mediation as well, you can find us online at westcoastfamilymediation.com. And I think Laurie introduced me at the beginning because I realized I'm very bad and I always do that. But I'm Amanda Singer. I'm one of the founders and one of the mediators. I am a licensed attorney and also a CDFA. And we do, all mediation services, and always happy to speak with anyone that has questions. So, Laurie, thank you so much for speaking with me today. I think that this has been a wealth of information. And I feel like, I even learn more when, we talk. So I appreciate it.
All right. Thank you. Happy to be here.
Thanks.